Okay, you guys, today we're going to be talking about mortgage forbearance, what it is, how to get it, and what to do afterwards. So we got to start off with what is forbearance. Now, forbearance is typically when you can delay your payment for a set period of time, but at the end of that period, you're going to have to pay one large lump sum. And deferment is typically when you can delay your payments for a set period of time, but at the end of it, you can either extend your term so that you're paying less for a longer period of time, or you can add the cost of all of that to the end of your loan term, and you can have a few different options with deferment. Now, in terms of mortgages though, there is no real differentiation between the two. And Fannie Mae and Freddie Mac just came out in the past few days and specified and clarified that. They said, you know, you are not going to have to make one large lump sum payment at the end of this. We're not going to have everybody take on these deferments and then all of a sudden have to pay $10,000 at the end. That's not how it is. There's no, it's their vernacular. So when you have student loans and stuff like that, they typically have a real differentiation between the two and in a few other cases. But in terms of mortgages, there's no difference. So they're calling it forbearance, but unless you really want to pay all of that money at the end of that term, you're not going to have to. You're going to be able to extend your loan. You're going to be able to pay towards the end. You're going to have a few different options, and I'm going to specifically go over all of those in just 1 minute. Now, why are they offering forbearance? It's because the federal government wants to provide quick relief to all of the people that have lost their jobs, taken pay cuts, had to stay at home to watch the kids, and had all of those, specific situations during this time. Now, it's based on an honor system. So if you don't need this, do not go and get it. And besides ethically, that reason is because if you say that you needed it and you didn't actually need it and you get it, they could come after you later for fraud. So aside from the ethical reasons, legally, if you do not need this, do not go and get it. This is for the people that have lost their jobs, had something actually happen right now to where this is something that's going to genuinely benefit them. So that's a big point to make. Now, the reason they're offering forbearance to everybody is because the federal government is 100% guaranteeing all of this. So if you don't make that payment, at the end of the 6 month or 12 months, or you can't fully make the payments over whatever period of time it is, the federal government's going to foot the bill for the banks. So the banks are willing to take the risk and offer you the ability to have the forbearance and deferment and all of that. Otherwise, they wouldn't want to give it to people, because if they don't have their money guaranteed at the end of it, then they're not going to do it. But since the federal government guaranteed it, they are. And the banks have an invested interest too, because they aren't able to foreclose and everything right now because of the regulations that have been passed. So this is essentially their only option. How does all of this work? Well, essentially the bank's going to take a look at your situation and give you a shorter period of time to start off with, let's say 3 to 6 months. And then towards the end of that period, they're gonna send a message to you either through mail or digitally or both, and say, hey, how are things going, and figure out whether or not you need an extension on that forbearance up to 12 months. So after those 12 months are up, you're going to have a few different options for essentially paying back what you've deferred. And we're gonna go over those right now. You can do a full repayment right at the end of it, paying back in one big lump sum. You can do a repayment plan, paying it back gradually, also alongside your normal mortgage payments that you're going to continue at the end of that. So if you're paying $1,000 a month for your mortgage, you're going to be paying that at the end of these 12 months, plus some sort of prepayment or repayment plan that's going to last, whatever period of time that is based on your mortgage. The third option is you can do a payment deferral or modification, and that's going to take those payments you missed and add them towards the end of your loan term. And then fourth, you can do a modification of the loan itself, where you're going to add years or add months to the term that you're paying, and that's going to lower your monthly payments, but you're going to be paying it back for longer. Now, there are 3 important things to mention. The first one is you won't be incurring any late fees during this period. The second one is foreclosure and other legal proceedings. They are not going to be happening during that period as well. And then third, which is very important, if you pay taxes or homeowner association fees or anything like that, separate from your mortgage, you are going to have to continue making those payments. Now, if you think you're going to need this either now or in the near future, what you're going to want to do is go to this website I'm going to put down in the description at the top, and you're going to have two links. One's for Fannie Mae, one's for Freddie Mac, and you're going to be able to look up your loan and see if it's under them there and figure out whether or not you qualify for this service. And then on top of that, you can also reach out to your bank. You're going to want to Google your bank and see what they have going on with this specific situation right now. Just type in Chase Bank Forbearance, Wells Fargo Forbearance, and just look up and see what their exact, details and resources they're able to provide for that. If you guys have any issues, just let me know down in the comments and I'll answer them.